Thank you all. It is a real honor to be here. I'm super, super excited. I love being at Scaling New Heights. Today, I want to talk about how I think accounting is broken. Now, you're probably thinking, okay, that's a bit of a rude way to start, right? Like, it's a Monday morning. Why are we doing this? So I apologize. But no, really, I actually do think it is broken. And so let me explain why. Well, as accountants, you may not agree with me. But as a three-time startup founder, what has really struck me is the difference in data quality between the engineering and the product side of businesses and the finance side of businesses. And so what do I mean by this? Well, on the engineering and product side, we have real-time dashboards. We see every single request to our web servers. We know exactly what is going on as it happens. We have Google Analytics. We see every single user who comes to our site, how much time they're spending, what they're doing. And all of these tools are effectively real-time, and they're effectively free. And then on the finance side, here's our P&L. This is our actual P&L. And I receive it in an Excel sheet or maybe in a PDF. And you get that monthly, but it's always like 2 to 3 weeks late. And it cost me like $1,000. And I'm curious, well, why, right? And so I logged into our bank a few months ago, and here's our bank, right? This is completely useless. So I don't know what we spent money on. The bank doesn't know what we spent money on. I would have to go log into Ramp, log into Bill.com, and then start seeing the underlying detail here. And so, yeah, not great. And so now you start seeing the pain, of course, you all know very well that you deal with as you're trying to close the books. And so it struck me that not only is accounting broken, but actually all of finance is broken. And that's really why. But of course, I'm very curious, so I just keep asking, why? Why is finance broken? What happened here? And so it all goes back to the mainframes. Now, this may be a little hard to see, but if you see at the top, you know your computer's old when it comes with a no smoking sign built in. And so, sure enough, back in the late 60s, a group of banks in California were in this race to digitize, and they decided there had to be something better than paper checks. We need a faster way to move money more reliably, and so they created the first automated clearinghouse. And the way ACH works is it is a text file. It is a fixed width ASCII text file where each row is a record, and that controls how the money is moved. And I'm sure you didn't expect to wake up today thinking we were going to dive deep into the ACH file spec, but here we go. So here is the underlying spec. I've highlighted the key rows. You get 16 characters for the company name of where you want to send the money. You get another 10 characters to describe the transaction. I've cut off the remainder of the spec to save you the heartache. And so you get 26 characters to tell you where the money is going and why. And that is why your bank feed looks the way it does. And so heaven forbid if the vendor you're dealing with has foreign characters in their name, has a company name longer than 16 characters, it's too bad because this literally is the spec. And this is the spec that's still used 50 years later. And in many scenarios, those huge mainframes are still in use 50 years later at some banks. And so that is what you get, right? And so the bank is really, really good at recording the date of a transaction. Only though 2-digit year, if you notice that, that's the date format they use. That is why Y2K was a thing 24 years ago. It records the amount in cents, it records the type, you get a nice little description, and that's it. And of course, from an accounting perspective, you don't get, well, who did we transact with? What was purchased? Why was it purchased? For when was it purchased so we can accrue it? All the actual useful information to all of you is completely lost to time. Because in this race to digitize, they apparently didn't speak with any accountants. So finance is broken. All right, well, can accounting do better? Let's actually talk about QuickBooks for a second. This is, by contrast, much newer technology, right? So QuickBooks came out in the 90s. It's been market dominant in the US since then. Maybe they've solved a lot of these issues. Oh no, wait. I can't have a vendor or a customer or an employee with the same name? And I'm sorry to poke fun into it, but they are worth $160 billion, so I hope that's okay. So what's the solution here, right? So do I really add a letter to the end? Yes, you do. You must be joking. And so I don't know if Neil is here in the audience today, but I need to meet Neil at some point. I love his passion for accounting software. So, all right, not just finance is broken, but finance and accounting are broken. And I have some good news. It's not your fault at all. The problem is the software, right? The underlying software is the problem. Taylor Swift reference, of course. So, quick background. Joe did an amazing introduction. I'm Jeff Seibert. I was an executive at Twitter. I'm probably best known for the Social Dilemma Netflix documentary. I will say, when you sit for an interview for a tech documentary, you really don't expect 100 million people to then go watch it. So thank you for everyone who has watched it. I'm really glad the message caught on. If you haven't seen it, please check it out. That came about because I was head of consumer product at Twitter. And through that, I really saw the power of data at scale, both the pros and cons of that data, which we go into a lot in the movie. Before Twitter, I started a company called Crashlytics during the mobile wave over a decade ago. And we did crash analysis. We helped mobile app developers understand why their apps were buggy. And we learned absolutely massive data analytics at scale. And so today, Crashlytics is owned by Google. It's in over 1 million apps. It runs on over 6 billion monthly active devices. That is effectively every active smartphone on Earth, including the ones in your pocket right now. And so we really got to see the power of truly big data analytics. Before that, I started my career as a Mac programmer at Apple. And so it's true, I don't have any formal background in finance or accounting, but I really, really love software. And I love understanding the root causes of what's going on under the software. And there's a great aspect of software, which is it's software, so we can fix it. And so that's what I want to spend the time talking about today. Back in 2018, I left Twitter. We made the documentary. I started Digits. And the goal was to try to reinvent accounting software based on the new technology available, based on machine learning. This was back in 2018. And I thought we could fix these underlying problems with the accounting software and the finance software. And then some genius came along and rebranded machine learning as AI. And all of a sudden, it's this huge hype wave, and there's all this activity. And now there's these tons of startups claiming that they're doing AI accounting. And it's creating a ton of noise in the space. And so you've probably heard of some of these. You might be getting questions asked of you from your clients on like, what AI are you using? Why aren't you using this? What's going on? And unfortunately, it is a lot of hype. Naval was pretty accurate when he posted this back in 2020. Sadly. Nowadays, if you see AI in a pitch deck, it's mostly, we just shipped all your client data to ChatGPT. Enjoy. So what I want to talk about today is the reality of AI accounting from the perspective of someone who lives and breathes the underlying software. What is actually possible today? What is real? And so what I want to go through is what can AI do today? What is coming soon? What will it soon be able to do? Answer this question, of course, will AI replace you? Joe gave his thoughts yesterday. I'll share some thoughts today. We heard a lot about the future yesterday in the keynote presentation. I want to ground this in the reality of the underlying software. And then we'll end with who should you trust, because there is a lot of hype in the space and what's going on. All right, so what can AI do today? I'm going to walk through all the models that exist. So we're going to talk through generative models, predictive models, similarity models, document extraction, some really cool tech is happening there, and end with autonomous agents, which is basically the cutting edge of the field right now. All right, generative models. These are what you're all familiar with. Who here has used ChatGPT? Pretty much everyone. Great, awesome. So this is a generative model. It is right in the name. GPT is a generative pre-trained transformer. And the way this works, you're probably all aware of this, so I won't spend much time here, is you give it a prompt, and it generates a completion to that prompt. And so here, if you give it the quick brown fox, you will most likely get, jumps over the lazy dog, of course. These generative models are eager, as in they are going to generate a completion of your prompt no matter what. The model is not particularly thinking. It doesn't care if what it's printing is right or wrong. It makes up the most likely completion based on all of the data, the billions and billions of parameters it has ingested and runs on, it just tries to complete your prompt. But it can be very, very useful. And so one of the core use cases we've seen in accounting is, let's say you're working through a monthly close. And you are taking notes, as you're going through the close, you're taking notes for this client, I still need these things, what's going on, and you just write quick bullets. You can have a generative model rewrite your quick bullets as a very polite, thoughtful, caring, long-form client email, so your client is like, wow, you spent so much time on me, I really appreciate all of your effort. This actually works really well. It takes what you give it in the short prompt and rewrites it as this great email. But when I think about AI, this is the least exciting part to me. I don't want AI to do the fun, creative, relationship stuff. I want it to do the actual boring, tedious stuff so that I have more time to advise clients. And so that's all we'll talk about generative models today. Let's move on to predictive models. Predictive models are where machine learning really started. And these models can do real work really, really well. So the way this works is you give it an input, and predictive models will predict an output from a set of known possibilities. And so here's the classic example. Here's a hot dog. What is it? Okay, it's a hot dog. Brilliant. For those of you who have watched the TV show Silicon Valley, hopefully you get the reference. And so here we gave it a set of possible answers, and it predicts the response. What's great about this is these can be used to do categorization of transactions. And so let's say your client walks into Starbucks, they buy some coffee, you see this transaction as you're closing their books. Okay, what is it? You can hand this to a predictive model, you can give the model their chart of accounts, and it can get very, very good at booking this transaction. And so great, all right, it put this as meals. Now, a lot of the startups sort of doing AI accounting hype that you might have heard about, they've basically done this and claimed they've solved bookkeeping. Obviously, that's not quite the reality. And so let's get into more complex examples. So of course, that might work for one client, but client B isn't in California. They're based in New York. And so if client B sees this transaction, it probably wasn't a meal or entertainment. Maybe it was a travel expense. And so as you start bringing more and more data to these models, they can get very, very intelligent at this pattern recognition and start realizing, oh, this was a California Starbucks. OK, maybe it's travel. Let's keep going. What if it sees this transaction? Well, if you spent $157 at Starbucks, that probably wasn't just coffee. Maybe that's a corporate event. And it doesn't matter where the client's based. For some reason, they're out there doing some sort of event. And so it can pick up on data like that. But of course, in the real world, client A and client B don't have the same chart of accounts. They all have different charts of accounts. And so how do you do that? Because predictive models work based on a set of known possible responses. Well, this is where we would need a more sophisticated model. So let's move on and let's talk about similarity models. So these are even more powerful. So what's happening here is these models work by generating what's called a vector embedding and then clustering that in n-dimensional space. Sounds a little bit abstract, but we'll go into an example. And so what this means is you can have these clients with vastly different charts of accounts. And you can train these models on thousands of different charts of accounts, millions of underlying transactions, and they can start to realize the similarities. And they start to cluster these things in their model. And so when you're going and booking, say, their internet expense, the model can learn that, oh, for client A, that goes under office, under internet, phone, and utility. For client B, that goes under IT expenses, telephone, and internet. And so by building these similarity models, you start to really encode a semantic understanding of business finance. Any chart of accounts, any hierarchy, it doesn't matter. And so let's go through an example. They get tricky, right? So on the basic stuff, OK, booking your internet expense, great. But what if the model sees these transactions? So here we have an Uber ride, great. And sometimes it shows up on your credit card like this, based on how you're paying Uber. Now, the model needs to know that these are the same. These are both Uber, right? And maybe it's ride sharing or however you want to book that. Well, here's your Uber trip. Here's another Uber transaction. But Uber Eats is different. The model needs to be able to pull these apart in the vector space so it can book this as meals. And so this goes into the quality of the training set as you're building out these models. If you have a really high-quality training set with a lot of data that's all been correctly booked, then the model can start to learn these distinctions. Here's another one. Let's say your client went on a flight and purchased internet. How do you book this? Right? Maybe it's travel. It could be another travel expense. Maybe it's an internet expense. I don't know. It's up to you. It takes a judgment call. And maybe you do this for some clients one way or maybe another way. The great thing is these similarity models can learn very, very quickly. And so as you book this for a client, it will quickly realize what you're doing and start mimicking you for that client. And this allows it to automate your work going forward and save you a ton of time because you do everything once and then it starts learning and you don't have to create rules and maintain them and so on and so on. So what is happening under the covers here? Basically, you have an object graph. So you have a whole bunch of transactions, you have a whole bunch of vendors, you have a whole bunch of categories, and this model is building a graph of understanding between them as it's looking and training over all of this data. And so this is where you really start to build a full model of finance and all the interactions that are happening. All right, that is similarity models. Let's talk about document extraction. So this is a huge pain point in accounting, right? You need to process receipts, invoices, contracts, purchase orders, bank statements. Wouldn't it be amazing if the computers, if the AI could do that for you? And so for years, for sure, lots of excitement. For years, there has been a ton of companies talking about OCR-based solutions to this. And I'm here to tell you that all of that is now completely obsolete. So there's a new technology called layout-aware learning models, language models. And these are incredibly powerful. And I think it's better for me to just show you what they can do. So here we're going to upload a bill. This is an invoice we got. And hand it to the AI. And in seconds, it's going to extract all the data from this invoice. So it has the bill amount, the invoice number, the invoice date, the due date. You go in, oh, look, it found all the bank info. Great, we can just get the ACH info right there. That's all set. And every single line item. And the way this works is these are layout-aware language models. They understand document structure. And you can train them on a data set of thousands, tens of thousands of invoices, and they begin to really understand what makes an invoice. There are no templates. This doesn't need any fixed format. It works on any invoice you've ever seen. And it is incredible what the models can pull out. Here's another example. So, all right, let's talk about the receivable side, the invoicing side. We went and trained a model to understand contracts. Long-form, multi-page contracts. Great, let's just generate the invoice for that contract. Pulls out all the information for the customer, their address, contact info, pulls out all the line items you need to charge them. All of a sudden, you're saving massive amount of time. And so instead of you going and manually doing this, now you're just in the review role, and you can double check its work and send it out. Another example. Who here is tired of reconciling bank statements? Everyone. Great. What if there was a model trained on bank statements? So here you go get it from the bank, you drag over the PDF, parses the statement, pulls out all of the dates and balances that you need to reconcile, and you're like, yep, that looks good, let's do it. And then it pulls out all of the transactions and maps them to your underlying transactions. And then let's say there was a typo, you made a mistake entering the date on one, it flags that, and you can decide whether to fix it or not. So you finalize that reconciliation, and you're done. And that literally took seconds, not hours, to do. So these document models are, and some confetti. You always need confetti. This is the ta-da. So these document models are incredibly powerful. This is one of the cutting edges of the machine learning field. It'll be really a huge time saver in pouring through documents and trying to extract data out of them. All right, so let's move on to autonomous agents. This is the bleeding edge of the field. And what these are able to do, when I spoke here a year ago and gave some basic machine learning examples, these didn't even really exist. That's how fast the field is moving. And so what these do is they perform self-guided, self-critical execution of open-ended tasks. All right, what do I mean by this? So the way it works is you have this agent, and you're like, here is what I would like you to do, and here's a set of tools that you have access to. And then you ask the agent, okay, given that, what is your first step? And the agent looks at the task and looks at the tools it has available, and it proposes something. And then you're like, okay, well, get on with it then. And so the agent goes and does it. And then you come back and you say, okay, well, look at what you did. How did that go? Please be honest with yourself. And you do have to be polite to these agents, actually. It does help them think better. So it evaluates its own work, and you're like, thank you. I really appreciate your candor. What would you like to do next? And it then proposes what it would like to do next based on its feedback of itself. That's where the self-critical aspect comes in. And it proposes something next, and then you're like, great, keep going. And you run this in a loop. And you're probably doubting me, but this does actually work. So let me show an example. So here, what happens when you get a transaction from one of your clients and you have no idea what it is, right? You probably go and Google it. What does an AI agent do? It Googles it. And so here we asked it to research a vendor. We picked a common one just so everyone can verify its work. So we asked it, what is Arby's, and what would it like to do? And it said, well, I'd like to go Google it. Great. And so it Googled it, and then it started researching further, and it pulled out its name, all its contact info, its websites, its Wikipedia. It then wrote a description based on all of the research it had done. It then summarized that description into a short description. We then asked it to pull out keywords from that short description, which then these keywords you can use to map to a chart of accounts and book the transaction. And it does this in seconds. So let's go to a real-world example. So we were working with an accounting firm, and one of their clients had this transaction, and they didn't know what it was. And their outsourced team had booked it as Stratton Ski Resort, because that's the top result when you Google Stratton. Lovely ski resort. Their outsourced team wasn't familiar with it. They put this as the transaction, and the client was not pleased. They did not go skiing. So we handed this transaction to the agent. Here's how you run the agent. It's a Golang script, and asked it to do its job. And sure enough, it correctly found Dale Stratton. Here he is. This is the consulting company they had hired, and it did that in seconds. And the advantage here is these agents never get tired, right? They don't care what time of day or night it is. They always do the same work, and they have no preconceived bias. And so when you're like, oh, Stratton, oh, I've seen that, oh, I think it's a ski resort, and you just type that in, the agent isn't taking any shortcuts. And so the probability of it making a mistake is way, way less than even the best humans. And so you can really start to leverage it to automate the tedium. All right, so that is what AI can do today. Let's move on to what is coming soon. And what gets really exciting is when you start to bring these models together. So we wanted to show an example of what happens when you combine the strength of a whole bunch of these models. And for this, our machine learning team was curious. Let's say you have a brand new client. They don't have any chart of accounts. They just started the business. You have their bank. You have their credit cards, transactions. What do, right? Well, today, you probably give them a template chart of accounts based on your experience and your other clients and so on, and then you meet with them and chat about what they want. What we asked is, could an AI just come up with it based on the reality of their business? And so what we've done here is we wrote an agent, and we gave it a really bare-bones chart of accounts. I know this might be slightly hard to read, but you can see at the bottom expenses. The only bucket is uncategorized expenses. So really bare-bone chart of accounts. And then we are going to feed this agent a whole set of transactions. And so here it goes. And what we're doing is we're asking the agent to book these transactions. And if there's not a great place to book them in the chart of accounts, make new entries. And so from this, it's building a chart of accounts from scratch. And so you see it building out expenses. We now have professional services. It booked the VC funding as an equity investment. What blew my mind is there's a bunch of Apple charges in here, and you can see it booked some as Apple services under software, and then it looked at the big ones, realized they were probably computers, and it capitalized them as assets. So it isn't perfect. I'm sure you can notice there's some mistakes, but this is what's coming. I think AI will be able to do this better and better and better as the models get stronger. All right, so will it replace us? No. It's not even close. And I know a bunch of folks have given different answers to this. There's a really concrete reason to me it won't, is we have learned you can never take a human out of the loop. Keep in mind the AI models only know what they're trained on, and so they can see a vast set of data, but they don't know what your client texted you last night or what's happening in their life, what you talked about the last time you had coffee with them. These models don't have the ongoing context. You as a human have all the context in the world, how the economy's doing, what laws you think might be changing, what's getting passed, what tax deadlines are coming up. There's no way today to encode all of that knowledge in these models. And so I don't see this being any near-term scenario. What we get really excited about is automating the tedium. And I think there is a near-term scenario to automate 90% of the tedium so that instead of you doing all the rote work that you don't get excited about, you're in the more review capacity. You do the 10%, the harder, the more complex problems, make sure everything looks right, interact with the client, et cetera. And that's where I see the real possibility here, because then we can give you back time that then you can use however you see fit. There are a couple things to be aware of that I just don't think the AI can do anytime soon. So first is business strategy. Let me be clear, ChatGPT will give you a business strategy. I wouldn't recommend following it, right? And so this is where you really want to talk with someone with lived experience who's seen other businesses, other clients, learned from their examples, and is able to communicate that in a way that they can really defend and you can have a dialogue about. The other thing, Joe mentioned this yesterday, tax advice. Again, ChatGPT will give you tax advice. It is not going to defend you. It's not going to represent you. You can't really blame it. The government will laugh at you. And so I really would not rely on these AIs for tax. And then the other thing is math. The AI cannot do math. It is terrible at math right now. Please do not have it do math. If you ask ChatGPT a math problem, it is going to make up an answer. And in very insidious ways. And so it may look like it's right too, but as you get more into it and ask something more complex, it's just completely bogus. So be very wary of any company that's selling you an AI solution where it does some math. All right, so I do think AI won't replace you, but someone who is good at using AI may replace you. And so you really want to start adopting these tools and stay at the cutting edge of what's happening, because these do promise to make you radically more efficient. And I think that's maybe the risk, is firms that really do this well will be able to outcompete the market. And finally, who should you trust? Well, there's a lot of hype and noise in the space. As you're talking with vendors, really ask them for details on what is actually software and what is outsourced human labor. There's a lot of misinformation in the space right now. Even in Silicon Valley, there's a lot of startup pitches where it is very misleading what's going on. And so really push for transparency here. Really look for companies that are sending minimal data to third-party models, particularly GPT. As prior speaker talked about, data security is key. My whole background in data privacy with Twitter and so on, this is something we care deeply about. You want to make sure everyone is treating your data, your client's data, with the utmost care and not disclosing anything unnecessary. Look for responsible AI policies around how companies are guarding against bias, are training the models, are keeping all the data secure. And then this is up and coming, ISO 42001, around AI governance. Look for companies to start pursuing this certification to show that they're serious about doing this correctly. All right, so that is accounting. I want to spend the last few minutes just talking about digits for a bit, because everything I just showed you is real. And this is all what we have been working on to prove out and make happen. So we train and deploy all of these models in-house. We barely rely on third-party models for anything. And we believe we are the first in the world to run AI agents in production. Our team is incredibly well connected in with the leading AI companies, and there's a lot of hype around agents. No one's actually using them. As far as we know, we're the first to deploy them, which has been really awesome. So the best part is we're building digits for all of you. So, all right, well, what is digits? What are we building? We were here last year. We help you wow your clients, first and foremost. We're probably best known for our reporting, so I'll give just a quick update on that. We do really powerful reports, built-in secure commenting, drag and drop charts and graphs and tables you can add to your reports easily. We have full P&L, balance sheet, everything with Hover to Discover, so you and your clients can just mouse over to get underlying insights. And we have a couple of big things coming. We've gotten many requests for scheduled reports. So if you're a firm that sends out your reports always on the same schedule every month, we've now saved you all the clicks. You can just schedule them in advance, and they all go out to your clients. And we've heard all the feedback. We are rolling out full year-to-date, full 12-month period column reports, class breakdowns, all the more advanced reporting functionality that everyone wants. So that is all coming. All right. We also do live client dashboards. These have been completely rewritten since I was here last year. Beautiful tiles that you can show your clients. So live KPIs, this all pulls data in real time. You can show them your runway, cash flow, anything you want, and they're completely customizable. So you can build dashboards in seconds and share them out with your clients. We also do powerful insights and analysis. I will flag, this is not AI. We literally just built a financial modeling engine, so all the math is guaranteed to be correct. And we surface these insights to you and make your advisory practice way easier. So you can go into Digits, see all the insights for your clients, and then have a conversation with them about it. And we also have Ask Digits. We launched this at Scaling New Heights last year. The reaction has been amazing. You can ask the AI any question about your finances. It uses the financial modeling engine. So it goes and asks our modeling engine what to do, get the correct answer, and then unlike GPT, you get full graphs. You can drag these onto the dashboard, share them with your client, et cetera. Really, really powerful and a huge time saver instead of you having to go export data to Excel. All right, we've also gotten a ton of requests for budgeting and forecasting. So we went and looked at the industry. And this is a lot of functionality to go build. And we wanted to see what was out there and was there an opportunity to bring a big platform into Digits. And so today, I'm very excited. We're announcing this to the world right here. We have acquired Basis, and we will be integrating their budgeting and forecasting platform into Digits, so it's all in one place. And all of this is now SOC 2 Type 2 certified. So this has been a huge effort by our engineering and compliance teams over the past 18 months. The SOC 2 process is quite involved. We are very, very excited to achieve this milestone and happy to share more details at the booth. All right, we're also, though, expanding from Wow Your Clients into a new major work stream, which I call Automate Your Tedium, based on everything I just showed. So starting with AI Bill Pay, we announced this a month ago. We've been testing it with a whole bunch of startups and small businesses, and it is brilliant. So the way it works is exactly what you just saw. We parse any invoice you have. It automatically extracts all the information and reviews it for you. Yes, including all of the line items. No more data entry needed. And it makes the entire process just drag and drop the bill, send it to your client to approve, and click pay. And I was using it on Friday. I literally paid a bill in 5 seconds because you just drag and drop it, click approve, click pay, you're done. It's truly amazing. So that is coming soon. We are also announcing AI Bank Feed based on the technology I just showed you. And so no more rules configuration. This connects to your banks, credit cards, financial institutions, et cetera. And using our predictive models and our similarity models will auto-book the transactions. We believe this will get to 90% accurate. And that'll allow you to auto-book 90% of incoming data. You review the remaining 10%, the more tricky cases, et cetera. Also, AI reconciliations. And so exactly what I showed, add the bank statement and let us auto-reconcile the accounts for you in seconds with the AI. So thank you. All of this is coming soon, and today we are opening up early access for it. So very, very excited to share that we are looking for firms to partner with and design and develop this with us over the course of this year. One of those will be Highline, and I wanted to share some quick thoughts from Matt, the co-founder and CEO of Highline.
Hey, I'm Matt Gardner, CEO and founder of Highline. Highline is an outsourced financial operations organization like many of you. We provide outsourced bookkeeping, CFO services, tax services, and people services. We like to think about ourselves as a new category of firm, reimagining and anticipating and building towards what we believe technology is going to do for the space. I think there's a very incredible opportunity and technology inflection point looming on the horizon, and we're building for that in anticipation of that. We've been early supporters and adopters of Digits, and we're excited to continue to partner with Digits as they lean in even harder to the accounting firm space, helping us all rethink how we deliver the services to our clients on a daily basis and how we think about the skills that our people are going to need to be successful in this new world. So encourage you all to join us in signing up for early access to Digits, and look forward to reinventing the future of our space together.
All right, so quickly, how do you join? Super simple. Visit us at the booth. I'll be doing a meet and greet at our Digits booth right after this at 11, so come say hi. I would love to meet you all. We also have the co-founders of Basis here with us as well, so meet them, ask all your questions about budgeting and forecasting. We are doing a power breakfast, so for those who really want to dive deep into this, Rob from our team will be doing an AI accounting deep dive and answering all of your questions tomorrow at 8 a.m. Please stop by this, Magnolia 16 to 18. And if you're unable to make it, feel free to email us, earlyaccess@digits.com. So to summarize, what we have today is all of our tools to wow your clients, reports, dashboards, insights and KPIs, our Ask Digits AI, really all available today. And then coming soon, stay tuned for more announcements, our AI bank feed, reconciliations, bill pay, and budgeting and forecasting. So to wrap up, I believe accounting is broken. However, it's not you. It's the software. And so let's boldly go fix it. Thank you.
Thank you, Jeff.
Thank you.
Yes.